And we are getting ready for our trading day, Tuesday, July 9th. This is Mike O'Connor. And Chaikin Analytics is a software program that we use to make money in the market. I am not an advisor, broker, dealer. I can't give you advice. I'm not employed by Chaikin Analytics. I do use this software because it absolutely works. I'm a trend trader, and I'll trade along with you in real time every day to help you navigate this awesome software so that we can all make some money by the end of the year. And of course, the Chaikin Power Gauge is a multi-factor trading model that combines technical and fundamental analysis to give you an edge in the market. You're able to not only be extremely aggressive in outperforming the S&P 500 by choosing very bullish stocks and following that model to outsized returns. And you can see they back-tested this for a decade through 2010 to produce a 20% plus annual return. And then over the last 2 years, they've actually forward tested it in real time, and they've outperformed the market, which has been a very strong market, by 2 percentage points, which over time adds up. So my rules as a trend trader, I always look at the markets first, and provided they are strong and uptrending, we'll select bullish stocks in the best sectors, in the strongest industry groups, and we'll use trading signals to get into the market. At the same time, when the market is choppy or weak, we'll do the opposite and look for weak stocks and weak sectors, weak industry groups with bad Chaikin Power Gauge ratings, which is a combination of technical and fundamental ratings, in order to make good bearish trading decisions. And that actually is what I'm going to do today, which is kind of it kind of goes against the grain of what's happening in the market right now. So as we look at Chaikin Analytics for iPad, remember I put stocks in watch lists. Each watch list represents one of the major sectors in the U.S. economy. And the one you can't even see here, which is one we're going to focus on later, is XLB, or basic materials. It's the commodity sector. So anything you can drop on your foot is not really working right now. Oil, gold, silver, agriculture, hard goods that we use to make stuff from. That's been one of the worst performing sectors, and it has been for a long time. And with the market really kind of running up right now, and it's been running up for several days, if we're due for a pullback, then that sector is going to pull back harder than the strongest performing sectors. And of course, by sectors, I mean ETFs that contain a lot of stocks that are representative of healthcare, financials, and discretionary. And so let's start by looking at the market here, and I'll pull up my browser, and we'll get over to the market here. I was looking, a few different time frames. We've talked about this before, but from a long-term perspective of many months to years, we have broken out of a sideways trading range, and we can expect the market to end significantly more positive than it is today. So it's a great time to be a bull if you believe in technical analysis, and I certainly do. If we were to look at then the weekly chart, we can see the trend that we've established since mid-November of last year is definitely still intact, though we've pulled away from this trend line, and in fact we've pulled up since bouncing off and retesting this horizontal trend line recently. Finally, where we actually point and shoot, which is on the daily trend line, we can see that once again we've made a series of higher highs and higher lows here until recently, where we broke down. And actually, if I were to grab a trend line and show you more specifically, we're kind of right at a decision point here, aren't we? All right. Where since the November lows, we've been following this trajectory. We broke down through this trajectory on very high volume, and we have since retraced quite dramatically on lower than average volume. But we're kind of back through a really important horizontal support line. If I can draw it. Let's see if they're going to let me draw it. There we go. You can see that we sort of broke down and then broke back above this line. And by doing that, we really have now, I think, firmly established ourselves where I was bearish to neutral before. I'm at least neutral in the market. And neutral in the market means we really don't know which direction we're going to head in, so we're not going to trade too aggressively in either direction. We'll put on fewer positions and we will trade half position sizes. If we look at the market in terms of what sectors are outperforming or underperforming the S&P, I always like to look at 2 time frames. I like to look at the past 6 months. And we can see, and this really hasn't changed that much, that on a 6-month basis, consumer discretionary and financials, healthcare have been strong performers. Now, this one is starting to pop its head up again, and this is kind of interesting. Consumer staples are a defensive sector. They have yield, and generally, people that are looking for stocks that pay a dividend will go into this particular sector of the economy. This one's sort of been outperforming as interest rates have been spiking up, and the interest rate in the 10-year Treasury has been, above 2.5%. Consumer staples had been getting whacked, as had utilities, kind of another defensive sector that pays, a yield on the stocks it holds. But you can see healthcare, the other defensive sector, has been doing pretty well. That's the 6-month cycle. Let's take a look at the past 3 months. And when we look at those, very clearly, consumer cyclicals and financials are really the 2 big winners in the past 3 months, with industrials peeking its head above the line, which means that there could be a sector rotation from defensives into more cyclicals, though it looked like the XLP also was looking better on a 6-month basis. So instead of worrying about those things that bubble up and bubble down, look for the strong, consistent performers. And if we were to take trades today that were bullish, these are the sectors where I would look. Where would I look if I were bearish? Look at basic materials here. On a 3-month basis, it is a significant underperformer, with only utilities and consumer staples in the past 6 months being kind of the more egregious examples. But look on a 6-month basis, the commodity sector has just gotten whacked. That's kind of where we stand. Now we're looking at the Chaikin Analytics for iPad free trial site. This is where you can sign up on my Facebook page. It is chaikinanalytics.com/MO2. You'll get a few testimonials here, and really all they're going to do is take your email address and phone number. You hit sign up and you get access to this awesome software platform. So let's go back and take a look at where we're at. We looked at the kind of the sector performance using top-down analysis, how the sectors have actually performed based on price in the last 3 to 6 months. Now let's take a look at those same sectors based on watch lists that we built. One I did was there's an ETF associated with each of the major sectors. So you have XLV, which is healthcare, XLF, which is financials, XLY, which is consumer discretionary or cyclicals, and then we have consumer staples and industrials, technology, energy, utilities, and while you can't see it, basic materials is pulling up the rear here too. And that's really interesting because remember, the way this works is that Chaikin Analytics looks at things at the stock level. There's a 20-factor stock analysis power gauge rating that determines whether a stock is green, yellow, or red. We'll get into that in a second. And then it ranks those stocks essentially from strongest to weakest within each watch list, and then it will tell you how your watch lists are doing relative to one another. So these watch lists, which reflect the major sectors of the U.S. economy, the same ones that we're able to look at where we notice a very similar relative performance, but this is looking at things from the bottom up. So based on the construction of the underlying stocks, you can see that healthcare, financials, and consumer discretionary or cyclicals are the best performing. And the ones that are getting whacked are like XLB, which you can't even see on this list, which is basic materials. So it's 2 ways to confirm what's happening in the economy right now. And while I'd love to take a trade on any of these 3 sectors, when I went through and did my due diligence on the Chaikin Analytics for iPad software today, I definitely got some trading signals. The problem is we've got earnings coming up, and most of the earnings happen in July. And in fact, for these three sectors, there is no company that has a bullish trading signal today that we can use to get into a bullish trade in the market. There is one that is available to us because it just released earnings today, and frankly, earnings were a beat in basic materials, which is a really bad neighborhood. So, bad neighborhood, let's look for the worst house in a bad neighborhood. If I go into my XLB, or basic materials watch list, and I scroll down to the worst stocks on the list, and remember, there's going to be some bullish stocks in there. I can't really show the Chaikin Analytics for iPad software. I have no way of demoing that because I'm on a PC making this video. But several stocks ranked higher than what you see here, which begins with the SEE and SIAL and US Steel. There's a bunch of stuff that is bullish. So we're looking at the bottom half of the watch list. And you can see there's a trading signal down here near the bottom for a stock with a very bullish power gauge rating. So let's talk about the power gauge rating first and foremost. And I guess I should be kind of helping you see things better by putting this in slideshow mode. But there are 20 factors that go into the power gauge rating, and they're broken into 4 categories with kind of 5 metrics each. You have the kind of financial metrics, which a lot of Wall Street analysts will use to determine the company's health, things like return on investment capital and business value and debt to equity ratio and those types of things. The sum total of those will give you a financial metrics rating. And then you have earnings performance, which is things like how many quarters in a row has the stock beaten earnings estimates, and have the earnings estimates surprise to the upside, that kind of thing. Then we have price volume activity, which is really all the technical performance of a stock, the 200-day moving average, and whether it's pointed up, and whether there's volume to go along with price increases, and if price is decreasing, was it on a light volume day? So technical analysis is a big one. And then one of the things that Mark Chaikin emphasizes is he thinks analysts really do move stocks. And you'll see a lot of stocks move just before and after analyst upgrades and downgrades. So he pays a lot of attention to expert opinions. When you get those ratings and you get a net composite bullish power gauge rating, it will be one of 5 figures. And obviously, if you're trading a bullish portfolio, you want most of your portfolio to reflect very bullish trading signals. And as you get extremely bearish or bearish power gauge ratings in your portfolio, the idea is to clip the losers and add more green to your portfolio. And Mark Chaikin even kind of maintains that it is less about trading for big winners in the very bullish and bullish categories. It's more about pruning the losers and switching stocks out so that you have more green. And over time, which they use a 3 to 6 month time horizon, you will outperform the market. I'm running a paper portfolio right now and made a trade today. And by the end of the week, I'm going to actually show you how that portfolio is doing. But I want to look at the kind of a deep drill down into what constitutes a good bearish trade. Now, today the market was up. Market's bullish to neutral, which isn't ideal conditions for a bearish trade, but with the market having run up so many days in a row, and especially with Alcoa just releasing earnings, and in fact surprising to the upside, we can expect probably price will open tomorrow a little bit high. And if you believe that this stock is really as horrible as the Chaikin bottom-up analysis would suggest, tomorrow is actually probably a great day to enter a bearish trade. No guarantees in trading, but here we have a weak sector, a weak industry group. So even the industry that Alcoa is in within the sector of basic materials is underperforming within basic materials. So that means that we've got a lot of institutional money fleeing or even shorting that sector. The other thing we have are technicals that sort of support what I was saying. One of the big technicals that you should be aware of is this orange line. This orange line is a double exponential 200-day moving average. And very simply, any stock that you're going to trade bullishly, that orange line had better be moving up. And any stock you're going to be trading bearishly, that orange line should be moving down. Second thing, if you're going to be trading a stock bullishly, price had better be over or above the orange line. And if you're going to trade bearishly, price should be below the orange line. And you can see it's only now just begun its journey below the orange line. So in fact, the way this stock has been largely bullish to neutral, with decelerating momentum over the better part of a year. And recently it's rolled over one more time. So we may get a very big downdraft, or we may get more of this. So again, bearish trades, we're going to be very cautious. But there's also an important sell signal here. And before I get into these indicators, I want to review the sell signal, because this sell signal will incorporate most of these indicators. So we're over here, and this is going to be an overbought sell signal. The overbought buy and overbought sell signals are one of my favorite. I would say this one, and then the reversal. The oversold buy, the oversold the overbought sell. There's another one here. I'll just show it to you because I think you care about it, and I do too. Is the other thing that I love is the money flow buy, the money flow sell, and the relative strength buy and the relative strength sell. Those are really the three trading signals that I use in my trading. Now, I don't actually own a position in Alcoa, so when we're talking about an overbought sell signal, for me, we're talking about a bearish trade. And I don't like to short stocks, so I'll probably go into the option market and do a call spread tomorrow morning. But in terms of this particular stock, the overbought sell rating requires three things to be true. The stock makes a short-term high. What do they mean by that? It means that the stock has pulled up above its 21-day exponential moving average. That is the dotted center white line that you see. The white lines on either side are Chaikin volatility bands, which just are sort of like price channels that expand and collapse based on the implied volatility of the stock here. And you can see the stock is kind of pulled down, and then while you can't see it here, it pulled back up a little bit just over the 21-day moving average. It hit its head on this orange line, the 200-day double exponential moving average, which is now pointed down, and then it made its move back down. So it made a short-term high and then crossed back below the 21-day moving average. That is condition number one for an overbought sell signal. Number two is the oscillator, which is sort of a combination of the MACD and stochastic, which is right here. You can see that it's kind of a slow mover, right? It's not a intra-week trading signal, but this oscillator moves up and down as the stock makes higher highs and higher lows, or lower highs and lower lows, or in the case of this stock, painfully neutral. It bounces up and down in a very predictable trading range of about 90 cents here. And you can see that this oscillator spent some time getting oversold as price corrected down, and then as price bounced back up toward this orange line, you can see the oscillator moved into what is called overbought territory. And overbought territory is simply above 70. It's a little dotted line here. So this is not unlike the RSI, if you're familiar with that, the relative strength indicator, which is an overbought or oversold indicator, a lot like the stochastic. Once price moves into the overbought zone, you want to look for the price curve to begin to roll over. And you can't really see it too well here, but we're in overbought territory and we're beginning to roll, though we haven't begun the downward descent. That's not necessary. We just want price to be in the overbought zone while we've made a short-term high, meaning we bounced above the 21-day moving average. But then the most important thing, and the driver here, is that our 20-factor fundamental and technical rating is bearish. So we've got a red signal here. So price action, that is decidedly bearish, that has made a kind of a short-term retracement in the context of an overall bear trend with an overbought signal. Those three things: price action, overbought, bearish power gauge rating, is a chance for you to sell. And tomorrow, because Alcoa beat the street, we should see a gap up open, and that'll be a great time to take the trade. Now, what I like to do is sell options. So what I'll be looking for tomorrow is, and this is aggressive because we're probably going to open into the $8 range. One of the bad things about a stock like this is we're dealing with very low price points here, $8 and $9. I most definitely will want to short the $8 August call, and so I'll be selling that, and I'll be buying the $9 call. The premium was about 28 cents tonight when I looked. It'll probably be 35 or 40 cents, which means that I'll collect a credit of 40 cents, and I'll have 60 cents at risk, give or take, and price will need to close below $8 in order for me to keep that premium, that 40-cent give or take premium that I should collect at the open tomorrow. And then I simply position size based on how much I can afford to lose if the trade goes wrong. So that's, in a nutshell, how you do a call spread. It's a bearish trade that gives you a little bit of wiggle room to be wrong. Although for me, it won't be much wiggle room because I will need price to finish below $8 by August in order to win. One other thing that I wanted to share with you tonight, and that is Alcoa has, or any stock that you look at in Chaikin Analytics for iPad, you basically use it in landscape mode, but if you turn it into portrait mode and you're on a particular stock, what will load in is a deep dive into the stock. So if you're somebody that likes to really tear apart a company and know what the financial metrics are and what underlying factors are contributing to each of the data points that roll up and give you that bullish or bearish power gauge rating, you have that on demand on your iPad, and it's very easy to get into. So if you emphasize fundamental ratings, ratios, and you believe that the stock is overpriced, not just overbought, this will give you the kind of granular information you need to make a decision. So in summary, the market conditions are bullish to neutral, but the market has run up for several days in a row. And Alcoa released earnings today with a beat, which means that they'll gap up into the open. And so what I'm going to look for is XLB, not XLP here, but an XLB-oriented stock, which is the basic materials, and sector that is underperforming the spider, and a weak industry group within XLB, a very bearish power gauge rating with a weak technical rating, and a sell signal that I like, which is the overbought sell signal. And most importantly, there are no earnings. We just had the headline risk today, or the headline risk event happened today, and no earnings over the next 30 days. So I think that's a really good trade. And so that's it for today. We will look for some more stocks tomorrow, and I look forward to trading with you. Thanks.